Welcome to the Weekly Trend Trader, how to do trend following. Well, this is it. This is probably the single most important video that I have ever released, as I've shared my 20 years plus 20 years of trading experience with you. This is the most important one. Why? We're going to look at how to trade a major stock market correction, a bear market, or a sell-off. When you understand this, it will save thousands of people from losing their entire trading capital. Many people do not understand how to trade in a bear market, do not understand how to trade a major correction. So just before we do that, if you haven't already, don't forget to subscribe. If you have subscribed, thank you ever so much for your support. It really do appreciate that. The more thousands of subscribers we have, we really appreciate and understand that you want us to continue putting out this content to help you with your trading, and you can glean from my over 20 years of trading experience. Don't forget to like as well, because it helps the YouTube algorithm to share this information with other people so they too can benefit from my experience, and share it with your friends, because you may have friends that have tried to trade and tried to do trading as a career and they don't know exactly how to do it. This strategy that I share with you helps them to do that and really can move them forward to becoming a successful trader. It's the strategy that you choose that will make them that successful trader. So let's get down to things now. Trading a bear market, major correction, or a stock market crash or sell-off. What do you do? Well, let's take a look at this example here. Here we have the Nasdaq, and there's a couple things that you must look out for. So firstly, we had the rising 52-week moving average, and we were having bounces off that moving average. I'll link another video in about how to trade the bounce, but then that bounce fails. We can see here the bounce fails. We get a decisive week where we close below that 52-week moving average. That's the first indication that we're going to have a sell-off. We close below, the lines cross, and the market sells off for a couple of months. Then the market runs back up, hits resistance as the 52-week moving average starts to fall, and it sells off again. Now, this doesn't always happen, but the key is price action. The candles have fallen below a falling 52-week moving average. Then we get the big one. Look at the 2 and the 4 cross. There's the cross. Some would refer to this as a death type cross below that falling 52-week moving average. There's the cross. We fall in September and the market begins to collapse, and it collapses all the way down to 1300 on the Nasdaq. Then we form a significant pattern there to tell us that the bear market's over. We look at October, and in March there's a double bottom at 1300. The falling is over and the market begins to recover. But let's just look at what happened before that. There's not always this warning indicator. Yes, we dropped below the 52-week moving average. That is key. But there's something else here that showed us and warned us that something was coming. If you look back before we dropped below the falling 52-week moving average, we had a head and shoulders. There's the head at 2800. There's the left shoulder at 2700. There's the right shoulder at 2700, and the neckline running through 2500. We broke that, closed below the 52-week moving average. That inverse head and shoulders was over. It was done. The pattern was in place. Then the market began its collapse. Let's look at another example. So here again, Nasdaq. Here's the dot-com boom, example of what was happening. Everything looked fine. The market was running up. It ran to a round number of 5,000. Market likes to reverse at 5,000. So that was your first warning example, 5,000. Then the market drops back, but it's still above the 52-week moving average. Then look at the double top at 4,200. That double top is screaming. This market is about to sell off. Double top at 4,200, round number. the market decisively breaks below the 52-week moving average on a weekly closing basis. Look at that level there at around 3,600. We close below on a weekly closing basis. The lines cross, the 2 and the 4 that we watch so much cross, and the market begins its sell-off for multiple months. Then the market comes back in the beginning of 01. Again, we get that cross. Price action is below the falling now 52-week moving average. This is key. Look at the 52-week moving average. The 52-week moving average is falling. We get a cross of the 2 and the 4 below the 52-week moving average, and we sell off again. Then we move to June, the summer of 01. Again, we get the 2 and the 4 crossing below a falling 52-week moving average. We get a third heavy sell-off, and then we get the final one. If we look at the beginning of 02, we get around the 2000 level. The market runs up to the 52-week moving average. It's almost like a resistance level. We get to that 2000 level. The lines cross. Price action is below the 52-week moving average, and once again, we sell off. During this entire time, take a look at the RSI. From that double top, for the majority of the move, it's below the 50 level. So the RSI has a bearish bias. There's that double top. We can see it on the chart price action. We can see it on the RSI. And then after that, we stay with that bearish bias. The market stays below the 52-week moving average that's falling. The market also stays below the 50 median average. That is your signal that we are in a bear market, and we are going to continue in a bear market for some time. Always look for that decisive week that we close below the 52-week moving average as your signal, and then the rest will come into play. Now, I know I've shared a lot of things with you here. You may not be familiar with this strategy. You may not have seen it before. This may be the first time you've watched a video. I'm going to put the latest video up. Have a look at that one, which is called Trading the Bounce, when we hit the 52-week moving average and we bounce higher. But also have a look at the strategy videos. There's a momentum trading strategy video, and there's a trend following strategy video. Key that you have a look at these and understand these so that you understand the strategy. Thank you for watching. Thank you for subscribing. Thank you for sharing. Have a look at those videos, and I'll see you on the next video.